Hey, we're back, and I'm your host, BKP, and it's that time of year. It's tax season, and you may remember Beth Bennett from last year, Tax Tips with Beth Bennett. We're glad to have her back this year. How are you, Beth?
I'm great, Brian. Thank you for having me today.
Things changed around a little bit in here since the last time.
They did. I like it.
You like it?
I like the setup. Oh, comfy.
Well, how about this? That was a great segue. Things changed since the last time you were here with Tax Tips. So we now, since last time we sat down, we have, first time in over 30 years, we have a new Tax Reform Job Act that the President of the United States signed last week.
Biggest one in over 30 years, so it's pretty huge.
And so, I was thinking about you a lot last year as they were negotiating this, and we're with Beth Bennett, Tax Tips with Beth Bennett this morning. And I was thinking about you a lot last year as they closed and they were negotiating this, of how does someone in your business keep up with what they're doing? I was trying to read, and I would see articles, what the tax bill means for you, and then I would read another one that was almost totally different. How does somebody in your business keep up with what's going on?
Well, that's one of the greatest things about being a franchise of a major corporation, right? Because if you're just a small one-off owner, it's very hard for you because you're just reading what's published in the news and what the IRS puts out there in bits and pieces. Fortunately for us, as being part of a big corporation, we have a whole team that's all they work on, that are completely dedicated to that. And they're deciphering and breaking it down and sending it out to us in usable information.
Usable information. So H&R Block has taken a lot of time, because that is their business.
That's
what
our
they
business,
do, right?
Yes.
So H&R Block has taken a lot of time to get usable information to you, the franchisees, for your people that are coming in that want their
to help
taxes.
our clients to be able to get the best tax return possible.
What would you think the biggest change you see? And I know that is such a wide question. But what is one of the biggest changes you see, whether it's a benefit or a negative, but what's one of the biggest things you see as a change?
I think there's like 5 changes that are really pertinent to everybody this year.
Go through all 5.
So the big one, and you're hearing so much about it on the news, is they've practically doubled the standard deduction, right? So if you're not in the process of buying your home, which that's really the trigger for most people to be able to itemize their deductions, is if you own your home and you're taking off your mortgage interest. Because if you're just paying property taxes and charitable contributions, it's really hard to meet medical. You got to have like a catastrophic medical to be able to take that on the Schedule A. Unreimbursed job expenses, again, that's limited to a % of your income, so that one's really hard to get to. So really, you can take off your mortgage interest, your property taxes, and then your Georgia income taxes and your charitable. That's what most people put on a Schedule A. Probably 90% of people that itemize, that's what's on there. With doubling of the standard deduction, practically doubling of the standard deduction, it's going to make a lot of Schedule A's go away. A lot of people, it's not going to be valuable to them to itemize on their federal tax return, okay? So that sounds great, right? We've doubled it. Hopefully you're making more money. However, here in Georgia, because we have Georgia's state tax, and a lot of states don't have taxes, so it doesn't affect them. But here in Georgia, this is huge, and I highly recommend everyone go see a professional and get a tax consultation this year. See how next year's going to affect you. Because if you itemized last year, or you itemized this year, and then next year, because all the changes are going forward, none are retroactive, none are going back to 17, and it's going to affect what you're going to do right now in the next couple of months. It's all going forward.
So whatever you did in 2017, that's what you're filing taxes on. That's the laws that will apply, and that's how you will pay your taxes.
Correct.
Okay.
Correct.
So nothing's retroactive.
Nothing's retro. None of the changes that they've made is retro. Nothing goes backward. Everything started on January 1st, and then will affect your tax return next year. So on that doubling of the standard deduction and making your Schedule A and your itemized deductions go away, that can seriously impact your Georgia. It still may benefit you to itemize on your federal and lose a couple $100s on your federal and gain it back on your Georgia. Because the Georgia standard deduction is like, I think for a married filing joint couple is like $5,000. Theirs hasn't changed in like 20 years, right? They've never raised any of that to go with inflation, anything. So that could be a really, really huge impact on someone. Yes, they might make just a tad more on their federal, but they could lose a couple of thousand in Georgia.
Okay, let me go back just a minute, because I'm so thankful you're here today. Schedule A. Let's go with the Schedule A deductions. So what I'm hearing you say is, not only at this time of the year, people rush to do their taxes. Mm-hmm. And some of the thought is, I want to rush to do my taxes because I'm waiting on my return. And this is the time of the year where I get a little bump. I get the check in the mail and I get a little bump. So there's a rush to do the taxes. But for the first time in 30 years, there's also needs to be a rush at the same time you're doing your taxes to say, how do I plan for 2018?
Correct.
That's as important as doing the taxes. So let me ask you, at H&R Block, at your offices, are you guys prepared if somebody comes in and they have a Schedule A deduction to look at them and say, you do know next year, and then start taking them down the road of how to plan next year?
Absolutely.
So that's the good thing, is if you have a client come in that does a Schedule A deduction, your people are trained to say, it's my place now to let you know that next year when you sit down with me, this area you're not going to apply for. I mean, you're not going to meet what you need.
Yes.
And then your client says, well, what do I do?
Yep. And that's not just this year. That's any year. That's every year. That's part of our job. We don't just put in the numbers. We're not just data entry. We're helping you financially plan for your tax situation each year. And so I'll give you several good examples. So just say you have a 16-year-old child. One of the things we help you plan for now this year you get the child tax credit, but next year your child turns 17, so that's $1,000 you're going to lose. You need to plan for that. Let's plan your W-4 to make sure that you have enough taxes withheld so you're not surprised at the end of the year. We have another great thing H&R Block does for us is they give us tons of calculators, so we can go in and we can plug in numbers and play with all the different scenarios. If you had a kid, if you buy a house, if college, all those things, we can plug in those numbers and see how it will affect you.
Well, I know every year you make recommendations to your clients, and that's the services you offer, not just file taxes. Right. I mean, you do that, but your job is to make recommendations so when they're filing their taxes, they get the most out of the tax laws. What would you call the biggest misunderstanding in this tax bill, or false truth that's out there that is spun around? What are some of the things that, if they come to your office with questions, you could clear up? So,
again, you keep hearing about three things, right? The three biggest things we keep hearing about in the news about the tax reform is this doubling of the standard deduction.
Right.
Doubling of the child tax credit. Right. So if you have a child under 17, it went from $1,000 to $2,000. That's huge. And it's refundable up to $1,400. So that's great. And then the tax bracket changes, right? That's the biggest three, right? Wouldn't you say that's the most you hear about? But one thing they haven't talked about, and you don't hear it anywhere, is that they're removing the personal exemption. So each person on your tax return, so if you're married, one for the husband, one for the wife, if you have kids, one for each kid, $4,050 that you used to get to reduce your taxable income. So if you made $10,000 and you got your personal exemption of $4,050, then you reduced your taxable income down. Then that's gone away, and no one's talked about that. So even though they're doubling the standard deduction, like I'm married with no children on my tax return, right? And I don't itemize. So I come out ahead in that scenario. If you take my daughter, for instance, who's married with 2 kids and does itemize, she loses money. She has more income taxable because they gave her $11,400 on her standard deduction, right? So now that's $11,400 less to be taxed, but they just took away $1,800 in personal exemptions, $4,050, $4,050, $4,050, $4,050.
Every Friday
and they're not talking about that.
Every Friday at 8:15, I do a segment called Ask the Doc with Dr. William Whaley, and I have to really pay attention. And now I'm doing another segment with a whole lot of numbers, and you're forcing me to have to. I'm like trying to really pay attention.
You're trying to visualize those numbers.
But that's what I'm saying is I'm so glad that I know you, that I don't have to do that every day. I can come and say, Beth, you know all this, And you guys are trained to do this, and you can help us. Two things I want to cover before we leave, and that I have tried to read in the news. H&R Block, you have several offices here locally, but you don't just do personal income tax, you do corporate tax. You do all the above.
We do all tax returns.
How big was the corporate tax break? Are you hearing any of your clients discuss it? I mean, how big was that?
Most of our clients are not the big C corporations that are going to be in here and filing tax returns with us. Most of the clients that we do are small business. They have large incomes, right?
Yeah,
maybe lots of employees, but most of them are S corps, and that's pass through.
There you go.
That was another big one. That's the
one I wanted to get to, because the media. We'll just leave that another subject. But they would say pass through, and nobody would stop and kindly explain that. Explain pass through income. Can you do that for us?
You got a whiteboard.
Got a whiteboard? Next segment, I'll get one. Yeah.
So it's kind of easy to explain. So if you're a small business, if you're an LLC, and each one does a little bit different, and there's different forms for each kind of business you can be that has the pass-through income. You can be a partnership, an S corp, and a sole proprietor. And so that income just goes on your personal. You'll do the business return, but the business actually pays no taxes there. Does that make sense?
Yes.
Right? So I do my S corp, and that business isn't paying taxes for the business. Whatever net profit that is, that goes through on all the partners in that company. So if you're a corporation with 4 or 2 or whatever, then and however it gets divided up.
So if you have an LLC, you do the business return, LLC business return. What's down on the bottom, if there is, hopefully, it passes through to the members.
And goes on their personal return as additional income.
Right.
So see, that's where they were talking about that. So, and I think for a lot of those, and I don't know that because I haven't played with that, but I think for a lot of those, they're not going to see the reduction in taxes like they're saying. That's just my opinion, which is
the last thing I want to discuss, because last year the mandate, the affordable care mandate, the penalty kept going up. And last year, if I remember correctly, you said a lot of your clients just paid it, right?
Yep.
What do you think removing that? Are you hearing anything from your clients? I know it's the start of the year, and this is when your clients really start coming in. But are you hearing anything yet on that being removed, or what do you think that means to?
Well, I think that's going to help a lot of people, because people were being forced to purchase insurance that they couldn't afford, that wasn't beneficial to them. I mean, how helpful is an insurance policy that you pay several $100s a month for, and then you have a $5,000 deductible? Yeah, so you have no copay, so you have to meet $5,000. So I mean, it's only catastrophic. So a lot of people did choose to pay the penalties, and the penalty, the new mandate is that the penalty's gone for 18. So if last year in 2017, if you didn't have health insurance, you're still going to pay a penalty this year.
So if you show up this year and you say, "Well, the penalty's gone," no, you've got That's next year, and you either have to make a choice. You have to pay the penalty because everything in 2007 applies, nothing retroactive. Anything we didn't cover today on the new tax bill?
Well, one of the things I want to talk about, and I can't believe you didn't bring it up, is the postcard.
No, I didn't bring that up. Go ahead.
And that's humorous, right?
Yes.
I know. But a lot of people keep asking me about that. Yeah. You really think we'll go to a postcard? You could go to a postcard if you're,
Okay, all right.
You get no credits and deductions, so it'd be your kids or.
That's why this is live, and it's great. She got me, done, deal. But the Congress, members of Congress, were holding up the postcard. Okay, for those of you, and when they completed the tax reform bill, that you'd be able to file on this postcard. And even the president held it up in a conference room and held up the postcard. So what Beth Bennett is saying is I didn't bring up the postcard, but odds of you really just filing your tax on a postcard is not going to happen.
A kid, somebody who's got, just you could have a married couple but you own no house, you've got no kids, you've got no kind of credits or deductions, and you worked at a job where you get a W-2. Or a flat rate. They'd have to change it to the flat rate. How would that work?
It played well on TV.
I know, right?
But people are asking about the
people
postcard?
ask me every day.
Do they about the postcard? That's great.
You really think we'll go to a postcard? No. I don't see how they.
Well, let's put it like this: it took 30 years to get this tax reform. I don't know how long.
And they didn't make anything go away. There's nothing, so if you wanted to reduce tax law, right?
Right.
Nothing went away. We just moved numbers.
That's it.
We doubled your standard deduction, but we took this away. You see what I'm saying? They just moved numbers back and forth.
I'm glad that's what you do. I mean, did you say they just moved numbers? Ooh, we're going to have to bring the whiteboard. What else do you have? Do you have anything else?
Don't forget this year that there's still, the IRS has made that an ongoing law, the PATH Act, where they won't release refunds until after February 15th if you claim the earned income tax credit and the additional child tax credit, because those were the high fraud credits. And so they're holding all those refunds till February 15th. They're matching up the information to make sure.
What is that one more time? If you have what?
The earned income tax credit.
Earned income tax.
And the additional child tax credit.
So those are the two largest areas of fraud. Mm-hmm. So they hold those up till February 15th.
Yes.
To review if there's any fraud.
Yep. So go ahead and do your return now, though. Don't delay starting your return. Go ahead, come in and get your return done just like you always would as soon as you get your paperwork. And then yours will be at the front of the gate when they start releasing them on February 15th.
Well, here's the information we want to know. If you can just give us where you guys located, what's your hours, what's your phone number. Yeah, we want everything.
Just that's pop quiz.
That's it.
So we have 3 locations in LJ. We've got Highlands Crossing down by Subway, 368 Craig Street, which is between Pools Barbecue and the drugstore on 515, and then we have River Street. We are open Monday through Friday, 9 to 6, 9 to 7. Each week grows a little more as the client flow grows. We just scale up and back as we need to.
Phone number?
Saturday, Sunday, 706-635-5538, 706-636-1099, 706-635-5563. What else? You want my blood type?
No. Beth Bennett, H&R Block Tax Tips. And let me just make a note here before we close. She has not said this, but I know she will eventually. If you call, if your schedule, they have hours. They have hours because they have people need to know when they're working and not working and when they're open and not open. But if you have a particular time that you cannot make it in their hours, call them. Okay, their staff will figure out how to meet with you, won't you?
Absolutely.
Their staff will figure out how to meet with you, when to meet with you. I'm not telling you they're open on Sunday. That's up to her.
We are Sundays. We have Sunday hours.
I know, but I'm just saying they will do things to help you make sure they fit your schedule, and they know what's going on. This is a family-owned business. They do an outstanding job. They have a well-trained staff, and here's something that's very important. H&R Block has done a great job of drilling everything down to usable information for their people. So if you go to other places, no disrespect, that are just single places that do taxes, and that's what they do, no disrespect, they may not have all the information that they have here at Beth Bennett H&R Block here in LJ. And look them up, Facebook, website. I mean, if you're on the internet, thank you very much. I appreciate it. You've answered a lot of questions for me today, and I have to tell you, the postcard, and they just moved the numbers around. I mean, we can talk all day, but that's really all they did, move numbers around. And don't ask for the postcard, because they don't have one. Right?
No postcard yet.
I'm your host, BKP. This is Tax Tips with Beth Bennett, H&R Block. We'll be back right after these messages.